All
we got to
right.
negative 50. I said, oh, we can't go much further. We got to
Mm,
negative 75, negative 100. And at some point, I just had to focus on what I had to do. But my God, 128 points in one day?
yes. So if anything, right, you can. So we got the fib extension from here. This your XPX 1 hour. Right. Boom. If you would have drew it off that time frame from this swing here, right? You see
Mm-hmm.
the. Let me exaggerate that line real quick. Mhm. Can you see it? It's clear to
Yeah.
you. All right, cool. So from there, from here to here, and this is all you're gonna do, right? Because you clearly see it's in a downturn. Boom. Cool. So now you have your levels of where price can potentially go. So you already got the 61%, 100%, 127, 144, 161. And a lot of times you do this ahead of time, especially going into the day before you going into the next day, right? A little easy trick. You grab a horizontal trend line and all you do is just pop one on each level, right? And then you look to the left. So as you popping these on the levels, then you want to just look to the left and say, okay, great. What is it lining up with? And this when you start using price action, say, what is these fibs lining up with? And that's what they're gonna tell you where 9 out of 10, what price gonna land at, right? Because I got templates. I love templates. Right, there we go. Fib extension. Boom. Boom. Here's my 127. All right. So now I'm just scroll over to the left and looky, what we got here, right? So let's cut the moving averages off and then we get back into those. So off bat, we got us a gap right over here. Oh yeah, people, we kind of just got straight into it. It's the sauce factory, by the way. Don't worry. We lit. Boom, boom, boom. All right, cool. So from the 100 extension to the 127 extension, right? We got a whole gap right here, right? So that's great. We know when price get down to this level, boom, 9 out of 10, they're gonna fly. You get what I'm saying? And this also is a great learning lesson for y'all too. This is a chart pattern. FYI. This ain't just no regular gap here, right? When you see this happens, this is a continuation, right? You see this? This is a actually measurable move. So what they'll do is you take his whole move and then you say what's higher, what's half of that, like 24. Boom. You take that, you put it at the high, and that's your breakout trade. And that's your measure move. You can go to the big book of chart patterns if you want to learn more about that. Because that's where it's located at underneath gaps. Oh. And that'll be your measure move for that gap. You see how I went straight to it? And then that's when it got there. It just kind of consolidated, right? Yeah. But these chart patterns here. So and also if you see price break up in the morning, right? And then start trading down. The moment it get hemmed up and it do not complete that gap, yeah, they're gonna be a nice little run. In what was it? Netflix used to tear me off the bone like that, right? Because act like you're gonna fill the gap and gonna go back down on the earnings, but it did not. And I just kept seeing this. I looked it up in the book and I learned that what was actually happening. I learned this actually was a chart pattern. So when it gaps up and it comes back into the gap and it chooses not to go any lower, yeah, that thing got some wheels behind it. It about to take off. So you always keep that in mind. Okay. Okay. So we know this void is here. Off bat now. Boom, boom. They're gonna want to attack that. So I'm gonna simply add a box there, right? Then come down to the 100% fib. Okay, cool. What's here? Now I'm looking at it. Like, all right, we got a little order block situation right here. Great, right below the gap. We got a nice fair value gap right here. Okay, that's smooth, right? These all 1 hour charts. We ain't moved yet, right? Then from there, got another order block right here. Boom. So this what I'm doing. I'm like going through on the left hand side, and I'm marking all this up. And then look at this. We got a small little gap here with the volume imbalance. So we already know they're gonna want this whole little area. They're gonna want all of that, right? Boom, that's all on the table. And so on and so on, right? And here's your 20%, 200% retracement. You seen how they came back into this gap, filled that, and go off. So they do come back in here. This can also act as an order block, and price will rock it out of there too. We also got this one order block right here at the bottom. So all I'm doing is marking up potential levels, and our field steady go on and on, right? Like that one song say, go on and on. So bada boom. Right. So that this what I want you to mark up too. So you see you got to break a structure, not only a break a structure, they just violated that. They just kind of, flew off the handle on that. So you had that little quick break, boom, and then also you had this external break right here as well. So looking at these, that let me know, like, all right, what's a potential situation? Knowing that they went off from here before, now I'm looking at my oscillators here, right? I'm watching it. My MACD ain't looking that strong. Look like they're trying to pull up. My RSI is all the way in the red. It's at the screen level. So now I'm gonna be watching to see will they consolidate at this level, or will they get some frames and push down some more, right? And all you want to do is start bagging up. Let's get to a daily time frame real quick. And you see the momentum from the daily still is in bullish territory and they pushing down. And RSI just got below the 50. So there could be some more power in that. But I'm just want to walk back and see where can I see any weakness at to say, will it be a potential reversal to let me know, like, all right, cool, this is the situation at hand. So you look at right now we're on a 12-minute chart. They trying to pull it up, but they ain't quite got what they need yet because they consolidating at this level. So I want to just pay attention to that, right? Boop, boop, boop. Since we got our ascension levels already marked up, let's go back to this 1 hour and let's play around with this. Let's ask a couple of questions. If then what? Act like that would have deleted it, right? So let's get rid of that. And from here, this one we get that retracement on, right? Because when they break major levels like that, in most cases, price like to retrace to rebalance price. Because right now we got a lot of imbalanced price. Let's go to everyday fib, make it a little more legible.
I'm sorry, when you say it broke a major level, so from the 88 to the 100, it broke the 88 and touched the 100. That's what made it a major break.
So you see here, right? On this breaker structure, we had this internal break right here, and then we had this external break. You see from this pivot point, they haven't been here since the 28th of June,
Yeah.
right? So there's been almost a whole, it's a whole another month now, right? And they
Mm.
just not breaking this. So you had this little quick little internal break because that was in the same leg that they broke down from, right? Now we got
Mm.
this external right here. If you go back and you look at it from here, see you had a break right here. See this low? See how it came down and pushed up, and then when this candle came through, this was your breaker structure. You had it put in a fair value gap, right? And then on top of that, it displaced price. So when you have
Mm-hmm.
price displacement with a screen force or screen prejudice, right? And it breaks a major level, guess what? That is a target of interest for price to return to. Okay.
Mm.
So you always keep that in mind with my little icon at.
I so see that.
So if you looked in the chat and you seen the chart that I posted this morning from my trade, you seen this is exactly what I did, right? I seen a break of structure. Cool. From there, once I seen a break of structure, I looked for a fair value gap or order block, which this morning it was an order block. It was 3 candlestick order block continuation. I marked on my block, waited till it got into my retracement zone, and I, handled my business, right? So this how I mark this gap up if I was waiting for it, right? So two things you can do here. You can say, okay, cool. This the pivot candle. See how this candle's above this fair value gap. You can run your fibs like that, right? And then you can wait for price to trade back into this. Typically, most times you can have a limit order set at the 618 and you're trying to buy in the power, right? Because you want to wait till it get inside the gap. But this is your retracement. Now, since it is a fair value gap, what I like to do is I know they're gonna come in this zone. I want to know exactly where. So I would get here and go from end to end of the fair value gap candle, right? And try to get it perfect as possible. And that's where I'm gonna put my fib at on this candle because I'm looking for them to come rebalance this candle. Typically like the rebalance candle at the 50% mark or the 61% mark, right? But XPX did like to get the 50% mark. The S&P 500 on futures and in the stock, they pretty much like to do a 50% retracement. The NASDAQ a little more volatile. They will do give you that 61, 65, 78% retracement. So you just got to be modest with it, right? So once you see they got to 50% of this candle and you see weakness coming about, boom, you take your entry. And that's how you get less drawdown, right? Boop, boop, boop. Okay. Let me alert. You stop loss at the 100% mark because they shouldn't beat this candle. This is a strong candle. You shouldn't have to worry about that. And then, we targeting lows, right? Like I told you before. This is a quick low. So as always, TP1. You can use the negative fibs for quick targets, right? And if you look at it, that is a 40-point move to negative 27. That is a 50, almost a 60-point move to the negative 61. You want to target the low. This was a $84 move, right? And you only have to risk 27 to take that trade. So the moment they hit, and you plan a reversal because of what, right? We go over this all the time. So once you got your breaker structure, that's telling you the market is shifting, right? Then from there, let's look at our oscillators here. This is why you start combining your oscillators in to start noticing the difference. Reverse. All right, let's blow up the MACD real quick. A lot of people don't focus on this. They just want to go straight price action. Pay attention to this stuff. All right, look at what your MACD was doing. I'm going to draw this out. Boop, boop. Boom. And then you see how the MACD was like tightening up. This is the XPX. It's a very volatile instrument, right? There's no way the MACD should be looking like this. So it's telling me prices consolidating or momentum is starting to consolidate and they fighting. So as your K2 lines on your MACD starting to descend, right? You see how they just coming down, Liz? Right. So as you see that, huh?
I was going to say making lower highs.
Yes, is the market structure on the MACD is already telling you what time it is, right? Even though price is doing this, your MACD is doing that. So the whole time, price is going up. This always bothers me. It goes at the bottom. So as the whole entire time, as price steady going up on some fugazi stuff, right? This foo. The MACD, the momentum is leaving out. So you never really pay attention to the trickery, right? You always want to make sure your momentum is matching the same energy as your price action. Now look at your RSI. It already got in the high demand area way back here on Wednesday, correct? From there, price been slowly coming down, momentum slowly coming down, even the RSI giving it up, right? Let's blow up the RSI. So from this peak to this peak, this is what the RSI been doing. It's actually been doing quite a screen, right? So looking at it, momentum is slowly leaving out, right? I want to see this day when it had that screen dump, what that was looking like. Boom, right before the gap, right? So your RSI been telling you like, hey, something is going on. So you could have said, size of these candles is letting me know something is fishy, right? They are selling it down, consolidating it, buying it back up, right? Okay, cool. Sell off, buy it back up. Not really extreme sell off. Now, what they're doing is trying to induce buyers, right? So they're gonna sell and then they're gonna show you, oh, now they're gonna buy it back up. The SPX going higher per se, right? So they're trying to trick you. So they'll slowly, boom, all right, boom, because they getting in their positions. They letting you know, like, they're getting in their positions. And here's the trap where a lot of people fall for it because they think time's still good because somebody been riding this wave back over here and they set it and forget it and fell asleep at the wheel. But the moment this happened, whoop, price slide, break structure. Okay, what's happening next? So when this rebound happens, people still believe this trend. Okay, they still following this trend, but reality, this is the signal say, yo, it's over. Because once they put this candle in, okay, why will they try to go over the top? Is not that high, or the probability of it is not that high, of them trying to beat that. Then remember what we talked about last night. Look at your oscillators, all your oscillators in the bearish territory, right? Your RSI right at the neutral zone. Okay. Your MACD is below your zero level. So it got to get up and look at the K2 lines, how tight they are, right? So you legit could have waited until you got that change of color in the MACD or any other instrument that you use. I'm sure you put up your other oscillators and you'll look at them. They start changing colors. They stop losing having that pizzazz in them, like they telling you like, hey, we bullish. Nope, nope, creep, 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 boom, drop off, right? So you could have took the highest form of the entry, or you could have waited until you seen a little more weakness. That's totally up to you. Optionable, right? You have all day. And you could have rolled it down because you know for sure, as long as I'm in this range, I'm looking for a candle to close below the previous candle. Or you could have waited for this candle to open up, and that would have been a little more insurance that you say, well, my stop loss is here. If I want to get in the open of this candle, well, I can put my stop loss at the top because it should be market structure now, right? And you could have just got in on this candle, set through a little consolidation, and then dump. But that also lowered down your profits, right? Because you're taking a less risky entry. But by over here, you kind of like, kind of is what it is. So that's what you pay attention to. Now we add some moving averages. Let's see what's up. According to any moving averages, somebody doing like a crossover. This is a 513, right? They would have said, oh, I got to go short here if they actually follow the rules. Most people don't, right? If you take the buy, you would have been up and you would have been like, good, it ain't crossed over yet. Good, good. By the time it actually gave you that little fake out, it's over, right? Cheese already slid. It is what it is. And now it's trash sauce. That's why it's very important to pay attention to your momentum, not just some oscillator, right? Is because it's meant that's to indicate, not dictate. No indicator is gonna dictate the trade. You are. So from there, you want to pay attention to how everything is moving in conjunction with each other. Where's the momentum shifting at? And if I'm coming up to a reversal point, I need the MACD, the RSI, any other oscillator I'm using to be on the same side as the market. I need this thing to be full force steam rolling towards this goal here, right? The moment they consolidated and then popped up with that weak momentum, that was the trap by itself. That was a bull trap. That was like, oh yeah, we about to break out, da da da. Boom, got him, coach. Smoked they behind. Forced liquidation. It was over. It was over. But looking at it, right? You took the crossover. Somebody went long there, got their wig knocked off. So let's kind of get close. I remember you mentioned your blow off top. So from here, you had that explosive move off the five, took a little sideways retracement back. Then it had one last hurrah. The moment it came down, it was over. It was just over. Over, over. But yeah. So these are little things you want to pay attention to. These candles are very crucial to see those, recognize those in the trend, and highlight them, right? And you set a little target. That's how they got all kind of little tricks. You can just say, hey, this is my target. I want to see price get back up to this level, and then I'm gonna take action. How long that takes, you don't know, right? But we got tools, so we're gonna find out. So this took 5 days to set up. From the moment it broke structure to the moment it retraced back into the gap and the moment it left, let's say it was actually, this was the first signal candle. So 4 days to set up, and then let's say how many days it took to play out, right? This is another important reason why, shout out Tony, you gotta buy time. So the moment, let's say you entered, so it took the initial low, that was 1 day. You feel me? But if you had time on your hands, you could have been here for a day and 6 hours. So you see how that works? That's the reason why you want to buy time and also be patient, because you would have waited these 4 days. That would have been one heck of a move, especially on the XPX. That's like 1,000% return on that contract. You would have been rolling in the Dizzo. So this is A+ setups. Let's grade it. You got any questions?
That's amazing. And you know what? I understood it all. So that was great. So
Hey,
my
Neil. Oh, no, go
Yes.
ahead.
oh, I was so if I understood really quickly, if I understood what you're saying, it looks like then we're going to continue going down.
Well, in theory, we could, but remember too, that was an aggressive drop, right? Anything that happens aggressively, price will like to rebalance. If they choose, or it depends on who can turn the market around. Like if you get some good news on one dang on stock, especially most people holding tech companies like Nvidia, Tesla, and all those other folks, right? I'm looking at the oscillators. They look like they want to pull it up. They want to do some form of retracement. So will they go straight down tomorrow? Don't know. Maybe yes, maybe no. Or they're gonna pull up somewhere. Remember, that's why I would say we run a fib. We want to see what's gonna happen, right? If they choose to pull up, maybe they come up to the 50%, retest the 200, or come to the 618. They come to the 50%, then we know what time it is. If not, then it's going to continue down into the gap that was left over from the past. You feel me? We had a catalyst today due to new home sales not doing what it's supposed to do. And we already knew that.
So tomorrow's GDP and durable goods. Interesting.
Yes. So we got to see how that can shake out. Depends on how the news break. That can be bearish, more bearish for the market, or it can be bullish. They use new homes. Everybody know new home sales was gonna be trash, right? These charts are telling you. Matter of fact, I'll show you on Microsoft, right? Somebody pull up that day that they had their little system blackout with the airlines.
Oh, Friday, huh?
It was last Friday, right?
Mm-hmm.
Okay, let's go to the daily chart. Save myself some candles. All right, cool. Friday. All right. So look at it, right? They had this a fair value gap right here. Actually, also a volume imbalance too. So they had this gap right here, right? Boom. On that Friday, they used that opportunity to give that last hurrah to get it down there. So let's go to the 1 hour because it's more exaggerated, right? But you look at it, they was already coming down, but they need a news catalyst to go ahead hit this level. So when they said, "Oh, guess what? Microsoft got a blackout," but it really was only dealing with CrowdStrike. But they use news events to trigger stuff like this, and just like anything, they bounced right out of it, came back, rebalanced this gap, right? Put in a 180 candle, then dropped again. So when they have news events, they already was going to that location. But when it come down to stocks, they need certain events to happen for them to justify the price going down, even though it's number the algorithm. You feel me? Like everybody in America know nobody buying homes at these high prices. Some people are, they getting bad deals. That's on them, right? But majority of Americans are no longer buying homes because of the interest rates and everything else in their mama, right? So they are not buying. We knew that. So why in heck everybody surprised, and why should you drop the market? It's a cover up. So that's why you don't fall for that little, foo stuff. You just know for sure I got a level where price must return to. Who gonna get me there? Who you gonna point the finger at? Oh, let's go to the daily. All right, what you got, Lee?
Hey, can you go back to Microsoft on the 1 hour?
Yes, sir. What you got?
I'm trying to see what date that was. You see the bearish candle going back? Yeah, right there.
Yeah,
So the same thing that you mentioned, like if once it breaks that low on that doji right there, it
yeah,
created the fair value gap
yes, sir.
on that. Yeah. Uh-huh. So it just basically went back and retested that, and then once it retested that, it dropped.
Yes, sir. So in some cases
Gotcha.
they would want to come get more of that, but we can never predict how high they was actually take price. You feel me? Because it probably was like getting it back up to that level could have been something significant for somebody else, maybe today or some other day down in the line, but it wasn't as significant for them that day. But they did retest the zone, as you see, and then they kind of got up out of there. But it did act as a nice resistance because you see price started rejecting from it.
Gotcha.
So
Okay.
like here,
Got it.
right? So let's just highlight this zone. Boom. So you see how they came and filled this regular gap, right?
Right.
So they filled that one. They didn't really too much care to come back up here because they had an agenda. They were trying to get down here fast as possible. So they'll just trucking along. And also price was kind of like high. So you couldn't trick too many people to buy in Microsoft at the moment because you gotta look at the extreme level of how high Microsoft was. So let's run a fill from this pivot, this in the screen pivot to here. At the time Microsoft dropped down, that's 23% off, right? Who want to buy at 23% discount? That ain't good enough. When they know they can get a 50%. That's why people bought, because it's 50% off. Now 61% off. The 23 is not a good enough discount, so a lot of people ain't gonna want to jump in and no 23%. That makes sense?
Yeah, makes sense.
So, especially when you get down to stocks, when you get in the futures market, the market is way more volatile, and they kind of follow a tighter regiment. So they'll kind of come back. Sometimes they may take a day or two, maybe a week, and come back for that price level, but they come back and get it. But in most cases with stocks, people gotta have a reason to buy this. They gonna say, man, Microsoft's still too high. I ain't gonna buy that right now. I ain't gonna buy that. But when they see it down here, they're like, oh yeah, I'll buy that. I'll buy in at that level because people got limit orders set. If anybody that's unbarely, you understand a fib, 10% of a fib, right? You can legit do this, set limit orders with your broker and have them pick you up at certain key points on the chart. You just have them sitting there floating good to cancel. Yeah.
What do you mean understand 10% of the fib?
Well, some people they believe the fib is some Greek mythology. They believe it's some mystery, so they get
Okay, so then just a minor understanding, as in not that you have to
Yes.
understand the specific. Okay, thank you.
Yeah.
Thank you.
You welcome. You welcome. Make it make sense for yourself, baby. Make it make sense for yourself. All right. But yeah, so that's a simple. That's why I tell a lot of people, especially beginning out trade, there's understand fibs, and once you understand that, you will know where to buy in your stocks. It's not overly complicated. A stock fib that changes to the percents, and then once you do that, make it look nice how you want to. You can just legit put this on the chart, and you'll say like, okay, from this trend from here to here, what is a great price to buy this? And it's telling you what is a great price. It's 50%, 60%, all right, 70%. Whoop, whoop, whoop. If it breaks below that, then run another fib, right? Then we'll run another fib from this low to up there. Whatever we want to do, right? So we'll bag out to, let's bag out to a weekly chart real quick. I know we were supposed to talk about fibs, so we're going to talk about something too. Boom. That just happened to be that leg of a trend. Let's blow this out. Boom. Okay. So from this low, right, boom, to the high. All right, that's 50%. Great. But what if I want to go from this low to the high? Okay. We'll get rid of that field. Boom. Now we only at a 23% level, right? So you got to start asking yourself, oh, that's a nice candle. Okay. Boom. Okay, got a little gappy gap right going on right there. Nah. All right. All right. So we got situations. Oh, got a little something else. Let me see. Yeah, I like this little situation there. So we got a nice little imbalance. Also another little gap. I ain't gonna mark up the chart all crazy like. So you can legit go away from 2023, run your fib to the high. Just say deep pivot. run all the way to the high, and you can start really demanding like what is a great price. If it drop 100 points, okay, great. That's a great deal because you know for sure you got 100 points back to the high. That makes sense. So you can set those orders according to multiple layers of fibs, and you can say, okay, I buy X amount of number here, I buy X amount of number here, I buy X amount of number here, depending on where it's at in the particular trend. If you buy on a quarterly basis, or you buy on the monthly basis, or even weekly basis, right? You go to different time frames, find a significant pivot point, and look for anything greater than 38%. If it's depends on what stock it is. Some stocks don't like to fall below 38%. Sometimes you get to 50. Like Apple for a moment, they didn't really like dipping below the 38. So you had to buy in at those levels. That was that. But you got other stocks, they will definitely give you a 50% retracement and you can buy in because that's a great discount. If it gives you something better than that, you know, you got your load to boat levels, right? So yeah. Let's see if we can find a truck. I wonder. I wonder. Can I come over? See, when you get to levels like this, you just bag the truck up, okay? Bag the truck up. Okay, you know, beep, 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 beep. You bag truck up. You load it up, all right? Black Friday sales. You get in there. But when it's up there, you be like, all right, I'll pick up a couple. I got some in my RAF R8. So this is part of your you know, your strategy to kind of build your accounts. We just don't only trade here, we also build accounts. So you got to do this on all your charts that you're holding for your long term, your 30 plus charts, 30 plus year holds, right? You go to each chart and say, where's the discount? Mark the discount from its green zones, and you say, okay, cool, let me buy in at these levels. This is my discounts. I'm not paying over this. And this is when you get into negotiations because you gotta have a strong haggling skill when it comes down to the stock market. You should not overpay, or you should not pay full premium for a stock. I don't care. You gotta wait a year, 2 years, or whatever. Don't pay full price because no reward in full price. The moment it dip down, you're gonna be seeing that red in your account, and you're gonna be talking about, I need to sell, I need to sell, I need to sell. No, you overpay, you overpay, you overpay. That's how that goes. Okay, people. Okay. Because subpar companies start off high and eventually they go where they belong. Don't believe me? Check your favorite airline. Now, any other questions? Oh, y'all good? Y'all smooth? Y'all good out here?
Can you go over the significance of the different levels? Like the 618, I've heard a lot of people say was a significant level. Can you explain why?
So they like to one, it gets into the whole factor, the golden ratio. They call it 618 for the golden ratio, right? Everything retraces back to the 618. If you break down all the measurements, everything give you a 618, 618, 618. Inside your head, your hair, the top of your skull, your hair comes out into a spiral, right? Give you the perfect symmetrical spiral shape, right? That's why they go into that. Now, a lot of trading is based off Greek mythology. So they get the stars, the moons, all the other little crazy stuff, and all the other great Greek philosophers and, you know, mathematicians and all that stuff. But when you look at the 618 or the 61%, this is a great discount. If you just want to keep it simple, it's a great discount zone. It's 60% off of the whole entire price. So you know you at least got 40%, you know, for its risk, and you got 60% upside. So when it pulls back down, that's why some odd reason it just love these areas because people will it to be. A lot of people believe in this stuff. So when you do that, well, guess what? People will draw price to those key levels. And it also happens to balance out, especially if you have a certain candle like this candle here, right? We see this gap with the 618 being there, 910 price will hit that. And you got all this consolidation. So technically, all of this is an order block, right? So when price kind of retrace, we think it's the fib, but actually that's where price took off from. It just lined it up with market structure and order blocks, fair value gaps, imbalance candles. They just happen to always line up like that. That makes sense? I'm trying not to overcomplicate it because it's really not that complicated.
No, that was perfect. Thank you. And then I've seen sometimes where they draw it from the bottom to the top and the top to the bottom. Is bottom to the top anticipating it coming down to go back up, and then top to bottom anticipating it to go back down? Did I say that right?
Yeah, so
Bottom.
from the bottom to the top, so your 100 levels at the bottom, your 0 level at the top. So we're looking for a price to do this. When we do it like this, right, we're looking for price to come here, then go like this. Okay, we're looking for, we're looking for that bounce. Looking for price to come down, then bounce. Now, let's go down to a lower time frame, like 1 hour. Real quick. Oh, then from here. So from this level, yeah, we can do it from there. Then we're gonna run a fib because it's the highest point in the leg, right? And we had a gap there. So we looking for price to bounce, and then as you see, it went up. So people will mark this because they want to know where's the golden ratio. Look where the golden ratio landed at, right at the gap, right? So of course they're gonna seem like a magical number. It just happened to line up. You see what I mean now?
Yep, I follow.
Yeah. So you had a reason why price should bounce. You wanted to know where price was going to discount at. So you're looking for your 50% or greater. And there you line it up. Boom, boom, from point A to point B. And you're looking for price to come back and then shoot down because we're going to looking for a price to continue. And so it almost got to our negative 27. So that's why we'll draw it from like this because we currently on a 1 hour, we're in a downtrend. Right? So we just kind of catching his leg information. So depends on what time frame you're on and what type of trading you're doing. You don't want all information. So us going out to the weekly chart and drawing that field, they do us no justice, right? But we on a 1 hour because we're looking for a day trade or a quick swing trade. This the current trend is down. So I'm gonna draw my field from point A to point B, and then I'm gonna wait for it to come back and see where it rejects from. And the moment it starts showing weakness, boom, I'm gonna take it because these fibs are also supporting resistance. After that, you see the 78 and the 65% acted as resistance to price. So they could not get past that. Then the 61% was resistance to price. But the 50% was acting like support until it broke down and now just going. So you're also looking at support and resistance. You feel me?
That does make sense. Thank you.
You very much welcome. You welcome. You welcome. All right. Any last questions? Because not, it's time for me to go carry the boat. What y'all got?
I have a different question about EMAs and why the 13 and 5 are so why you
Smooth.
chose those. Yeah.
Uh, 13 and 5 are great for scalping and quick trades. Depends on what type of trading you're trying to do. You're trying to do a quick, like a quick trade or get more frequent trades. The 13, 5, 13, those are also fib numbers, by the way, too, right? When you start getting to the Fibonacci sequence, it kind of goes into it. It's a 5, it's 3, 8, 9. I don't think 5 is, but 13 is for sure. But yeah, it's just a price love the 5 EMA. And you look at any chart, price love riding on the 5 EMA, right? That's pretty much a nice trend. Yeah. Oh, okay, cool. The 5 is a Fibonacci level. So price love riding on the 5 EMA. The 13 is it give you a quick setup. It's not too long, like a 21. Because you go with a 21, it takes a little bit longer for price to cross over. It ain't gonna cross over as often, right? Because I like to use fib numbers except the 200 because a lot of hedge funds, thank you, Tony. A lot of hedge funds use the 200, but I was using 233 at one moment, but I like the 200. So look, if we do a 521, you see the distance, how long it'll take for it to cross back over. It's kind of late, right? But a 513, it gives you a little bit of faster crossover. but not too crazy. So let's get these drawings out the way real quick. We don't need those no more. So it kind of give you like a boom, give you a quick little pop, but these will fake you out if you understand market structure, right? So that's the reason why you got to combine price action with moving average crossovers. Moving average crossovers are delayed and they also will fake you out. But if you take them on higher time frames, they give you enough time to let price play out and then for you to come back to that crossover and take it like it need to be taken, right? So understanding this, see how they get you the cross. Okay, you had the cross down. Well, why my mouse? I think I need to change the batteries of the mouse. All right, well, and then you had your cross up, right? So you take this cross up, technically you be, knocking your own wig out because you slipping on your pippin. All right. You had a moment of consolidation with a breakout. This is an order block. They traded you right back. Okay, cool. Once you had that drop, you're looking at this big old candle right here. Wide body, big wide body joints on gun. All right, wide body joint like that, right? So you're looking at it, boom. And then they say, hey, it's running down. What's my fib, right? They say you run a fib. You see how they went to a 78 because price, the rejection zone was up here, not at the 618. They show a little bit. So that's why I say it's really not that magical if it don't line up with certain key things in price. So in the lower time frame, I'm sure it's something inside of this. Let's go to a lower time frame, matter of fact. Rewind. Oop. That's a 12-minute chart. There we go. Boom. Rejection. So you see how that big old 180 candle right there? Big body joint right here. Like that. They popped up and gave it back. Oh. Oh, jump. That's what they want. See that? That's why I say price comes to certain key things for a reason. So when you understand these things, right? So you get a quick scalp. Here's another thing about moving averages, right? So you see how they came together and start hugging like cousins, but that was a fake out. They really wasn't trying to cross over nothing. They wasn't talking about nothing right there. They were just tussling for who gonna win this, right? But it wasn't doing nothing. Then they came out of that, gave you a nice little retracement back into this block, and then they gave it up. You feel me? So, but that's the reason why I use a 513. It's a smooth crossover, but reality, I mainly trade price action. I like the CDs on other time frames, use them as a guide, like especially when price coming off the 5, I can use that as a like quick little guide where price can potentially go. Then from there, I would or use it as a stop loss to kind of trail profits. As long as it's staying on 5, I know for sure I can stay in the trade and let that run. Depends on how things go. Or I'm just moving my stop to break even, right? So yeah, that answers your question.
It did. Thank you.
No problem.
Which are you using? Can you share the EMA thing that you're using? Because I think I have like 3 different.
I used the 3 EMA. So let me show you. Boop, I used this one right here. 3 EMA.
Got it. Thank you.
No problem. Hey. Yeah, that one save you some space on the chart. Mm-hmm. All right. Anybody else?
Neil.
What up? What up, JC? What they do, baby?
Not much. What you think about that drop today? You think it was coincidence?
Man,
What you thought? You think it was just a little bit of trickery for
I
or you think it's selling, or you think tech's selling off faster than what it's supposed to do in September?
I seen you in the dojo of study early, my brother. I guess you wasn't listening.
No, I was listening. Because I'm thinking like, I'm thinking, I don't know, man. I ain't no wizard on them. I'm thinking it was a pullback for it to continue to go up.
Well, remember the seasonality chart, right?
Yep.
All right. So what season are we in? What
We
typically
about to
happened
switch
in
out
this season?
small caps, right? About to switch over to small caps, right?
But far as like the market cycle goes, because typically when school out of summertime, you get a nice
Yeah.
run. But then once school starts back, the market shift into a what cycle?
Okay.
Historically, where the market starts shifting to. Because
I
what
don't know the answer. I ain't gonna lie to you.
all right, so now I'm gonna refer. I'm gonna give you a little more quiz. So from there, after the summertime, August do what? August to end of October. What happens when November roll around?
The market usually drop.
There we go, baby.
I mean, okay. That's what I said. Do you think they did? You think they're pulling it early, or
Nah,
I
this is
mean, because
about time.
okay.
Yeah, this is about time. Show the market been running. Look at this crap, right? Let's go back out. Let's go to the weekly chart, right? On what circumstances should we do this? Boys are more broke than a little bit. Why are we doing this? Riddle me that.
We definitely running.
Okay. For what reason? The ain't boys up there
Hey,
complaining on internet. They ain't got no gas and stuff. They broken in a little bit. They ain't got no money, none of that. Yeah.
right.
So there you go. Now look at let's back test real quick, right? So this is July, right? This last July. So this 2023. So this June ran all the way up. July hit, mid-July. Market starts shifting down, right? Boom. August
Right.
down. Pull back in August. September down. Boom. Sideways October. Okay. October. In October, November, they pop it. Boom, boom, boom. Run it again. You get what I'm saying? And this Microsoft. So they ain't gonna see too many bad days. So this what I mean. This is about time they start sliding back. And if we go to the matter of fact, let's do this. Yeah. New price.
But this AI bubble, we ain't never seen nothing like it.
All right. So hey man, AI just look who own AI. Microsoft own OpenAI. Google own AI. These the same companies. Them boys straight regardless. Like all those little small AI companies getting bought up by the major tech companies.
Facts.
The market it typically start running like in November for the Black Friday sales. They call it the Santa Claus rally, right? So look at it right here. This what I did was let me get these moving averages out here. So this orange line represents the SPY. This is the S&P. This is the SPY, right? So look at it. July. You see how the market is dipping? Boom. So the SPY take longer to recover than Microsoft does. Microsoft smoking them out. So they'll bounce back a little bit faster, right? So we can add one more. A new price scale. Excuse me. So you see, tech do a little bit better because they ain't as way down as the S&P 500, but you still see everybody take the same dip. Okay.
Mm-hmm.
So we go back 22. Look at August, right? Down. Consolidation. November, and they start coming back up.
Mm-hmm.
Okay. This is not nothing new. Nothing new. This is what they do.
So you think we're gonna return back to the fives and in the QQQ? You think they will return back to the 500s? Or that's
probably
dead.
later this year.
Okay.
But on the real, like you gotta still also look at what's going on with the economy. That's when you start getting into the fundamentals of things, right? You start getting into the economics, like what's going on with the economy, what new products that got going on, and then you got this other stuff cracking out. So what resources are we gonna attain? What new businesses are gonna drop? What benefits gonna happen for us? So who's gonna drop something new? Who's gonna bring a better business to America? This, that, and the third. Will people feel strong about the economy, and will people take on more debt? Us running up gonna depends on the people willing to take on more debt. If they're not, well, guess what? We should be going down.
Right.
country don't make money that you don't owe nobody.
Right.
Right.
Because I switched over to the IWM to the Russell. I've been running up, trying to run up in there for a little bit for the last couple of weeks, here and there.
Okay. Well, this the IWM right here. See, they also dip around the same time. They typically all bounce the same. Oh, see, they also turning down right now. You feel me? So that's why I say when you start thinking like, so this typical time. It ain't the market haven't really seen no red in a while. We could be shifting to the downside for a little minute. But remember, we ain't no wizards. We ain't predicting nothing. I ain't pulling no crystal ball out of the imaginary sky and saying all this stuff. I'ma play it as it lay, right? You feel me? So as it come, I'ma play it. This why we have setups. This why we are being patient. This why we wait for setups, right? Because when it comes, we take advantage of it. We don't try to predict. When you start getting into the prediction game, that's when you start losing money. When you simply be patient, because we are patient traders, right? We're intelligent investors. So we're going to wait for the market to set up to give us a perfect setup so we can take advantage of those setups. From there, we're going to wait for the market to give us a great discount on our stocks so we can buy more stocks and get more shares of said company so we can have more power, right? So these are things that we do because we are intelligent investors and highly patient traders. We don't rush into the market. We don't run into burning buildings. We wait till the fire get put out, then we walk in. Okay, you wait for the optimal setup. A+ setups takes time. You just can't force it, and that's the reason why I'm like, hey, when it goes, it goes. Where it goes, right? The tools and everything we use kind of help predict where it can possibly land. It's all this number of theory until it get there. So when it do get there, then we react accordingly. So the moment it hit that level, okay, cool. Now I do this. Boop, 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 boop. Now I do this. I'm looking for this. I need Bryce to break this. Once Bryce do this, I do this. Cut, draw, simple. But in the meantime, you must sit on your hands so you can possibly save capital and mental health so you can be at the right mindset to take that trade at the proper leverage. Because you throwing away all your money on these frugalist trades, thinking price gonna go here and price went there, you getting stopped out, you cutting trades, you losing nickel and diming your account balance because you taking these dumb trades when you're gonna sit back and wait for A+ setup and use your capital wisely so you can put on a proper position versus a position you can only afford because it's what's left for your account. That's gonna be the difference maker. You feel me? It's a reason why I tell y'all, find a reason not to trade. Don't try to run in the market every single day to put on a trade, paper trade that you got to, right? But don't try to run into the market every single day and throw capital at the wall and hope something stick. Because all you're going to do is burn it in commission fees or in unnecessary stop outs. One of the two. Or if you're not using necessary stop outs, you're giving the whole entire balance up. You're giving the whole entire trade money up because you refuse to get out or admit that you're wrong. So you have to have the right mindset when stuff is going on, and that you've been used to a bull market. You probably need to take a reset so you can readjust your mindset to say, hey, the market is no longer going up, it's going down. So let me readjust my bias or eliminate my bias altogether and only trade what the market is providing me. Have a clear-cut setup that works in a bull market and a bear market, and you look for that setup. You don't force it. You let it come to you, and once it presents itself, then you take it. Okay.
Yes, sir.
Smooth.
Good luck.
Good.
I'm on the phone.
Yeah. Even babies learn, people. All right. Anybody else? Hey. Okay. Well, you ain't got nothing for me. Neo ain't got nothing for you. Let me stop this real quick. Stop the recording.